Hi dear viewers, welcome to Dr. Vijay's lectures on accounting number 18. This lecture deals mostly with manufacturing account. However, try by self problems in final account balance sheet is also given. You have to work it out and see that we will check the answer in the next lecture. Let us consider try by self problem first. Trial balance of Sabu's firm on 31st January 2021 and further additional information are given. You have to prepare trading and profit loss account of Sabu's firm for the period ending 31st January 2021 and balance sheet as on that date. We have already done trading and profit loss account balance sheet of Sabu's firm for the month ending 31st January 2020. This trial balance is for the whole year, for 12 months, for the year ending 31st January 2021. So, you have to prepare file trading account and profit loss account for the whole 12 months and balance sheet as on 31st January 2021. The trial balance given shows the following debit balances: cash in hand, sund debtors, bills receivable, stock in trade, local taxes, stock in trade is opening stock, the insurance charges, plant and machinery purchased on 1st July, furniture and fittings, purchases, returns inwards, carriage inwards, wages for unloading goods, salaries and establishment charges, rent and rates and discount allowed. Credit balances are bank overdrafts, provision for bad debts brought on from previous period, provision for discount brought on from previous year, sundry creditors, bills payable, loan from Asad Bank, capital, opening balance of capital, sales, returns outwards, discount received, and commission from Meadows. It is not shown whether this trial balance is tallying or not. Before proceeding to prepare final accounts, you have to take the totals of debit balance and credit balances and make sure that the trial balance is tallying. The following additional information is furnished. Please read it very carefully and understand very clearly. Number 1, interest charged by bank on overdraft as per passbook is 8,900. 2, the aggregate of bank charges for services rendered is $6,800. 3, insurance premium paid for 1 year with effect from 1st April 2020. 4, furniture and fittings purchased on 1st September 2020, $25,000. Provide depreciation for furniture and fittings at 20% on reducing installment method. Only for the old furniture, calculate depreciation for the entire period of 12 months. For new furniture, only from the date of purchase. 5. Salaries outstanding for the month of January 21, $14,250. 6. Commission for the purchase from Meadows for January 2021, $36,000. It is still receivable. As per the agreement with them, commission is receivable for all the purchases at 20% of invoice price. 7. Depreciation is chargeable for plant and machinery at 10% per annum, reducing installment method. 8. Provision to be made for bad debts at 5% and for discount on debtors at 2% of closing debtors. 9. Rent is paid for 15 months with effect from 1st February 2021. 10. Further loan at 6% per annum accruing at the end of every quarter is got from Asad Bank on 1st April 2020. The old dues was cleared on 1st February 2020 itself. The old loan was closed on 1st February 2020 at the beginning of the accounting period. And further loan was got on April 1, 2020 at 6% interest per annum at quarterly rates. And 11. Local taxes paid for second half of the year 2020 is $2,000. What the learner is expected to do are the following. Go through the trial balance and additional information very carefully and understand everything very clearly. The adjustments, whatever adjustments are to be done, are explained in detail in slides 5, 6, and 7. Go through that carefully and understand it. Then prepare trading and profit loss account for the year ended 31st January 2021 and balance sheet as on that date. The answer will be verified in the next lecture. Slide 5 deals with adjustments required numbers 1 to 4. It is based on items given the information 1 to 4. Please read it carefully. It is self-speaking. Understand it and work out the problem. Slide 6 deals with adjustments 5 to 9. It is based on information items 5 to 9. Please read it very carefully and understand. Slide 6 deals with adjustments 10 and 11. If you have any doubt, please verify the relevant items in the trial balance and the additional information 10 and 11. Manufacturing account. A manufacturing firm, a firm which is producing something and selling, you should prepare manufacturing account before preparing trading account. So the final account, different stages include manufacturing account, trading account, and profit loss account. The purpose of preparing manufacturing account is to find out the total cost of manufacturing or production for the accounting period. The firm will have opening and closing stocks of materials, including primary packing materials and spare parts, and of semi-finished goods, besides the opening and closing stock of finished goods. The opening and closing stock of materials, etc., and the opening and closing stock of semi-finished goods will be shown in debit and credit sides, respectively, of manufacturing account. All expenditures and losses related to purchase of raw materials and manufacturing or production are shown in the debit side of the manufacturing account, and any miscellaneous income associated with manufacturing as sale of waste, sale of byproducts, etc. are credited. Information on manufacturing account continues. A manufacturing firm has to prepare manufacturing account for finding out cost of manufacturing. Cost of manufacturing or production equals opening stock of materials and work in process, item number 1, plus net purchase price of materials and spare parts, etc. for the period, item number 2, plus all other expense of purchase and manufacturing, item number 3, minus closing stock of materials, etc. and work in process, item number 4, minus any income or gain from manufacturing process, item number 5. Items 1 to 3 occurs in the debit side of manufacturing account and 4 and 5 on the credit side. The balance shown by the account is total cost of manufacturing for the period. It is brought down to trading account. In trading account, opening stock of finished goods and total cost of manufacturing occurs in the debit side and closing stock of finished goods on the credit side. Slide 10 gives a model problem for working out manufacturing account, trading account, and a profit loss account. Expenditures and losses are given debit side and incomes and gains on credit side. Expenditures and losses are purchase of materials and spares, returns inwards, carriage inwards, wages and unloading charges, power and water charges per plant, stock on 1st July, opening stock, that is raw materials, work in progress, and finished goods. Then salaries, rent for new shop building, electricity and water for office, interest on loan, bad debts, general expenses. On the credit side, major item of income is sales, then returns outwards, commission received, discount received, provision for doubtful debts, and income from sale of waste. See, of the items in the debit side, opening stock of raw materials and work in progress should come in manufacturing account debit side. Then should come purchase of materials and spares. Out of that, returns outwards has to be subtracted. Then carriage inwards, wages and unloading charges, power and water charges of plant. All the expenses connected to the purchase of materials and of factory are to be shown in manufacturing account debit side. Then further items, that is opening stock of finished goods, will come in trading account debit side, and expenditures from salaries to general expenses will come in, it is all related to office, and so it will come in profit loss account debit side. On the credit side is sales. It will come on credit side of trading account, and returns inwards to be subtracted from that. And further incomes, provisions, commission received, discount received, income from sale of waste, all should come in profit and loss account credit side. Provision for bad debts, doubtful debts, how to deal with, we will consider after going through the additional information. The following additional information is furnished. Interest on loan outstanding to small finance corporation. It is an expenditure which is outstanding. You will show in profit and loss account debit side and balance sheet as liability. Salaries to the employees outstanding also should come in profit loss account debit side, add to salaries. Rent paid in advance to be shown in profit loss account debit side, but to be subtracted from rent. Commission still receivable for the accounting year should come on profit and loss account credit side. Provision for doubtful debts is to be provided at a rate of 5% on closing balance of debtors. Calculate 5% of $3,99,000 and compare that with the old provision, decide whether to be shown in debit side of profit loss account or credit side. Depreciation is to be provided on furniture and fittings and motor vehicles at 10% per annum. That all to come in profit loss account debit side. Closing balance of furniture and fixtures and motor vehicles, it is given, for that depreciation is to be calculated. Tools and equipments are valued at the end at 1,50,000. Tools and equipments at the beginning was 1,82,000. So depreciation to be decided on the base of valuation, revaluation. Depreciation is 32,000. You have to show that in debit side of manufacturing account, because tools and equipments are used in factory. Closing stock is valued at the close of the period. Raw materials, work in process and finished goods. Closing stock of raw materials and work in process should come on manufacturing account credit side. Closing stock of finished goods come on trading account credit side. See how the items occur in manufacturing account. In the debit side, opening stock of raw materials and work in progress comes first. Then purchase of materials less returns outwards. Then carriage inwards, wages and outgoing charges, power and water charges for plant, and depreciation for tools and equipments. On the credit side, closing stock of raw materials and work in progress. Then comes income from sale of waste. It's a miscellaneous income from the production process. The cost of production is $8,18,000. It is carried forward to trading account. Slide 13 shows trading account. Opening stock of finished goods comes first. Then the cost of production brought down from manufacturing account is shown in the place of net purchases, 8,18,000. On the credit side, closing stock of finished goods is shown below sales. The first item on credit side is sales. From sales returns is subtracted. Okay, the gross profit is 4,62,130. The explanation of this slide 14, this lecture comes to an end. Thank you for your participation till the end. Please subscribe and share maximum possible. Slide 14 gives profit loss account. Expenditures and losses in the debit side. Please go through. Salaries plus outstanding, rent less paid in advance, interest on loan plus outstanding, then general expenses, electricity and water for office, depreciation of motor vehicles and furniture and fittings, provision for doubtful debts, under that new provision plus bad debts minus old provision. On credit side, gross profit is brought down from trading account, then commission received plus still receivable, then discount received. Net profit transferred to capital is 1,62,960.